Hi everyone. In this video, we'll continue working on the preparation of Success Systems Statement of Cash Flows for the year ended December 31st, 20X2. In the prior video, we began the statement by preparing the operating activities section using the direct method. Now let's work on the investing and the financing activities sections. Sometimes I have difficulty remembering what numbers belong in these two sections. Let me show you something that helps me to properly prepare these two sections. This is an exhibit shown in the textbook I use for Accounting 301. Here are the three activities sections of the Statement of Cash Flows. Cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. Changes in current assets and current liabilities affect the operating activities section when we use the indirect method. And we're not using the indirect method in this video lecture series, so we're going to skip this part of this exhibit right now. But what I really want to talk to you about is the long-term asset section feeding into the investment cash flows, and the long-term liabilities and equity section of the balance sheet flowing into the financing cash flows. Changes in long-term assets that arise from the inflow or outflow of cash will be shown in the investing section of the cash flow statement. These amounts will include cash paid for the purchase of plant assets or cash received from the sale of plant assets, and cash paid for the purchase of long-term or short-term investments and cash received from the sale of long or short-term investments. And those would be just about all investments except trading securities and cash equivalents. Changes in long-term liabilities and equity accounts that arise from the inflow or outflow of cash will be shown in the financing activities section of the cash flow statement. These amounts will include amounts borrowed from a bank loan and related principal repayments, amounts received from the issuance of bonds payable and related repayment of the face value of the bonds, amounts received from the issuance of company stock, both common and preferred, amounts paid for treasury stock, amounts received for sale of treasury stock, and amounts paid for dividends. Let's talk about the investing section for Success Systems. We need to look at the balance sheet and see if any cash was paid for the purchase of long-term assets or if any cash was received from the sale of long-term assets. Cash, accounts receivable, merchandise inventory, supplies, prepaid insurance, and prepaid rent are all current assets. However, equipment is a plant asset. As you can see, both the beginning and ending balance of equipment was $28,000. Further, if we look at the additional information provided, there is no mention of the purchase or sale of plant assets. Accordingly, there is no cash flows from investing activities for Success Systems 2020X2. But all three activities sections must be shown on the face of every statement of cash flows. There are several ways that this could be presented, but I chose to show the title, Cash Flows from Investing Activities, and simply put a 0 in the far right column. Now let's prepare the financing section for Success Systems. As shown in our handy summary, we need to look for long-term liability accounts and equity accounts that changed as the result of receipt or payment of cash. Accounts payable, wages payable, unearned service revenue are all current liabilities, so there are no long-term liabilities. Looking at the equity accounts, we can see that common stock increased by $25,000. It was $83,000 at the end of last year, and it was $108,000 at the end of 20X2. Therefore, there was a $25,000 increase. Let me ask you this. What usually happens to cause an increase in the amount of common stock outstanding? Well, Success probably issued additional shares of common stock during 20X2. If this issuance of common stock was issued for the receipt of cash, then the $25,000 would belong in the financing section of the statement of cash flows. So we need to see whether this $25,000 arose from a cash transaction. And if we look at the additional information, we can see that the company issued additional common stock for $25,000 cash. Therefore, we need to increase the cash flows in the financing activities section of the statement of cash flows by $25,000. What about dividends? Well, I know we have a piece of information down here, and I'll get to that in a moment. But there is a way to calculate the amount of dividends for 20X2. Do you remember the statement of retained earnings? Do you remember that beginning retained earnings plus net income minus dividends equals ending retained earnings? So in this example, beginning retained earnings of $7,148 plus net income of $18,686 minus dividends equals ending retained earnings of $21,034. If we solve for the unknown amount of dividends, we can calculate that dividends must have been $4,800. That's $21,034 minus $18,686 net income minus $7,148 beginning retained earnings equals $4,800. We should only show the $4,800 in the financing section on the statement of cash flows if the company paid dividends in cash. Now when we look at the additional information, it says that the company paid cash dividends of $4,800. So we know that they used cash to pay those dividends. So this $4,800 should be shown as a decrease in cash flows in the financing activity section. Please open your textbook to the flagged page for Beneficial Drill Company's Statement of Cash Flows, so you can use this cash flows as an example of what your financing activity section should look like. After listening to these instructions, please pause the video and prepare the cash flows from financing activities section of Success Systems Statement of Cash Flows for the year ended December 31st, 20X1. Use Beneficial Drill as an example and use the cash flows from the changes in the equity accounts that we discussed a few minutes ago on the balance sheet. Then start the video again to check your work. You should continue the statement of cash flows that we started on the third tab in the workbook provided. So you should show cash flows from financing activities, issuance of common stock, a positive $25,000 because that's cash coming into the company, and payment of dividends, negative $4,800 because that's cash going out of the company, and net cash flows from investing activities were $20,200. Now it'll only take a few minutes to finish up the statement of cash flows. The next line you will add to your statement of cash flows is net increase or decrease in cash, and that will be the total of the cash flows from the operating, investing, and finance sections. Just add those three numbers up. And then you will say cash balance January 1st, 20x2. We have the years. Go ahead and put the years in. So cash balance January 1st, 20x2. You'll take that from your balance sheet. And adding the net increase or decrease in cash to the beginning cash balance should calculate the ending cash balance. We do not have the information necessary to do the non-cash investing and financing activities disclosures on this statement of cash flows. So end your statement of cash flows with cash balance December 31st, 20x2. Start your video again when you finished and check your work. So you should have calculated a cash balance December 31st, 20x2 of $77,845. That number was calculated as follows. The net increase in cash from all three activities was $19,685. That's negative $515 plus 0 plus $2,200. The cash balance January 1st, 20x2 is last year's ending balance of cash. That came from the balance sheet. Last year's ending balance of cash was $58,160. Net increase in cash added to the beginning cash balance equals the ending cash balance. You're not quite done with your statement of cash flows until you check and make sure this number is right. This is our calculated cash balance at December 31st, 20x2. We need to check that and make sure it agrees with the balance sheet at December 31st, 20x2. If it does agree, then we didn't make any major errors in our statement of cash flow. There might be some errors, but no really major ones probably. But if it's not the same cash balance, then there are definitely errors in our statement of cash flow, which will have to be fixed. So let's check and see if our ending cash balance on the balance sheet was $77,845. Yep, the ending cash balance on the balance sheet was $77,845. So I feel pretty comfortable about our statement of cash flows. I made our statement of cash flows pretty small so that it would show up all on one page. I hope that the video will show it fairly clearly, but that's what our statement of cash flows prepared on the direct method should look like. Well, that's all for this video. In the next video, we will prepare this statement of cash flows for success systems under the indirect method. See you next time.